That you said 72 acres in New York. I imagine that can't be cheap. And then it's 150 sites.
Yep. So that one was a $2 million acquisition. Um, that has $500,000 gross revenue in place.
Whoa,
Uh,
whoa, whoa, whoa. Hang on a second. That's good numbers.
Welcome to the Xplor Show, where we dive into the worlds of entrepreneurship, real estate, and motivation. Each week, we bring you inspiring conversations with people who are exploring new frontiers and shaping the business world. Thank you for tuning in. Now let's get to the show. Hey, welcome back to the Xplor Show with Scott and Ryan. Scott, how you doing?
Hey, Ryan, doing pretty good. How are you today?
Doing good, doing good. We got a good episode on today. We got a fun guest, Matt Whitermore. He's a multifamily investor, and now he's breaking into the campground space. Matt, thanks for coming on.
Thank you, Ryan. Thank you, Scott. Happy to be here. Appreciate the invite and looking forward to a fun conversation here.
Yeah. So I have been pretty hardcore on this Twitter, social media, and if you haven't already, and Matt, I'd love for your input here, but Twitter has become kind of this space for all things real estate. This is how I came across Matt actually. About a month ago or so, there was uh, a retweet community member, real popular. He hosted an event and invited 100 people out to New York. He kind of threw a get together for everybody. And long story short, Matt made a post saying something about, maybe I throw an event for the rejects. And from there, I was like, oh, I like this guy. Immediately followed, sent him a thing that, hey, I'm a reject. I'd love to come. But then from there, kind of started looking a little more into Matt's past and what he does, and he's got a very interesting niche in the real estate investment side of things. So yeah, Matt, tell us a little bit about yourself and what you do, and I'm really looking forward to this conversation today.
Yeah, I appreciate that. Likewise. So I am based in Syracuse, New York. I am turning 32 years old in 5 days
Okay,
here.
same age.
So yeah, nice, nice. Been in commercial real estate for almost 12 years now. Started as an employee doing acquisitions and capital markets, all kinds of different commercial real estate, worked for some big mortgage brokers, mortgage lenders, bounced around and learned as much as I could, and always wanted to learn enough to become an investor myself. And so a couple of years back, 3, 4 years ago now, started making moves to kind of leave the W-2 workforce arena and start investing myself. And started with small apartments in upstate New York. And pretty quickly thereafter, sort of accidentally fell into the campground space by way of looking at mobile home parks first. I had worked on financing a few mobile home parks and fell in love with that land lease model. And actually, kind of by mistake, reached out to some owners of seasonal campgrounds in the Northeast that were miscategorized in my list of mobile home parks. So back in 2019, started getting responses from campground owners that said, "Hey, Matt, not a mobile home park, but I'm a seller. Come by and check it out if you're interested." So I went across New England, across upstate New York, touring campgrounds, got to look at the financials, and got to meet some really awesome owners. And a few months into it, just fell in love with the space and decided I was going to spend probably the next decade or even the rest of my life acquiring as many of these things as I can.
Wow. So tell us a little bit more here. So let's step back. So you started investing in multifamily, but before that, you were working at commercial brokerages. What exactly was your role at these different brokerages, and what got you interested in going into the multifamily first?
Great question. So I was primarily a financial analyst, working on investment sales and debt and equity placements. And um, I'm like one of those curious entrepreneurs that whenever I meet somebody in a new business or go into a new business, I always think like, oh, what would it be like to own this business or to invest in it? So, led by curiosity, and especially in the real estate world, part of my job as an analyst was putting together the packages that we would send to lenders and whatnot. So I saw all these personal financial statements of these longtime real estate investors and
And thought, wow, these guys really are making it big.
right. And honestly, met a few that had pretty humble beginnings, and by the time they're in their 60s, they're worth well over $100 million.
That's
And
awesome.
that not that, I believe everybody can do that. Anybody can do that. It's obviously not easy, but it's just about, pragmatic and continuous action and continuously buying bigger deals, trading up. So I started putting together like financial models of like what it would roughly look like to start with like a 2 or 4 unit and trade up every couple of years and kind of take that, and it's over 20, 30 years. It's pretty amazing what you can
Just
do.
keep rolling it into one another and building that snowball, essentially.
Exactly.
Yeah. So what, I guess you were working on the debt and equity side. And was it mainly multifamily deals you were working on there? Is that kind of how you got this interest in the multifamily side, or?
So there was quite a bit of multifamily, but I worked on really all different types of commercial real estate. Honestly, when I look at sales or production or, databasing and outreach, it's all about numbers and, what's going to be the most efficient use of your time. So it just seemed natural to me to start in multifamily, especially small multifamily, because you can pick out any county, any town, village, whatever, and have a pretty healthy list of prospects to go after. So as, a novice, I figured let's go after what, is the most plentiful type of prospect, essentially.
Yeah, and there's, like you said, there's a lot of different smaller multifamily all across the country as well. So it really helps being able to break into different markets, and you don't have to have as much money necessarily to go into these a little bit smaller deals. So what was the first deal? Tell us about that first deal that you got into.
Yeah, that was the quintessential kind of cliche house hack deal where
Okay.
I was engaged at the time, now married, and convinced my fiance at the time that, it would be a fantastic way to build some wealth and kind of make our first investment. So I bought a 3 unit historic like walk up 4-story 3 unit in downtown Albany, built in the
Okay.
1800s. Really cool, beautiful property, but quickly learned why it's can be a pain in the neck to buy a property that's 150 plus years old.
Yeah, a lot more headaches.
Yeah, for sure.
Did so? How do you still own that property, or did you?
No,
Okay,
I've since exited all of my multifamily, so I'm 100% in campgrounds at the
he's
moment.
really gone all in.
Oh yeah, big time.
Well, I
Hey,
feel like
that
that's a good place. If you're all in on campgrounds, we can kind of dive into that. That's a very interesting niche that I feel like not a whole lot of people look at. Everybody, I know few people that want to
Yeah.
get into the mobile home parks, which,
Yep.
to be clear, is very different than campgrounds. Like,
Yes.
Googling it, they'll all pop up on maps. Why the campground? And then can you kind of tell us about some of the properties? Are they kind of resort style, or are they kind of just park and go out on the lake? Like, what are your campgrounds?
Yeah, so for now they are more on the rustic end, and there's sort of a niche within the niche that is very popular in the Northeast of the United States, which is the seasonal campground, which means a couple things. It means that it's usually only open for 6 months out of the year, but what that has evolved into over the last 50 years or more is a product of campsite and campground that caters to a full season renter. So at the campgrounds that I own, we have people that are approaching 20 years in the same campsite. So they leave their camper there for 20 years. A lot of them have since bought a new camper and swapped out the old camper, but they're in the same site. They winterize their RV and store it for the winter in the campsite. And, we closed at the end of October and then we open at the beginning of May. And so they come in May and open it up, and it basically just becomes their vacation home for that 6 month season. So it's a super affordable way to kind of have that, seasonal like cottage almost, but it's an RV. People build decks around them, they landscape and garden. It's really amazing to see they kind of take a pride of ownership in the campsite, even though they don't own it.
Yeah. So are you guys doing ground leases on these, or how does that work?
So technically, legally, it's a license.
Okay.
And it's a license to use the site for 6 months at a time, essentially. So
Interesting.
we go out to all the current seasonals in September-ish and say it's time to renew if you'd like for next year. And then we give them a contract that's, it's a seasonal camping contract. So it's not a lease. And that we're kind of getting into the reason that I fell in love with it, especially coming from the place of being a landlord, a residential landlord in New York State, which is kind of a brutal place to be a landlord.
Be a little difficult.
Yeah, yeah. So that's one of the aspects that really sucked me in was I am pretty much exclusively in the eyes of the law in New York, at least, not a landlord.
Okay.
Um, so, I have people that have been occupying the same site for 20 years,
Wow.
which gives you really good, like, it shows you the stickiness of it,
Yeah.
and the occupancy levels are really high, much like multifamily real estate. But on the whole, I never say never, but at large, I don't have to worry about evictions. I don't have to worry about a landlord-tenant relationship legally. If somebody starts causing trouble, I can essentially just call the cops on them and get them removed.
The, these are
So
customers, not tenants.
exactly, yeah. We some people will kind of use the word tenant. Customers, I always correct them. I'm like, just for the record, you're not my tenant. Because in a state like New York, if you
Agree to
accept
it.
someone calling
Mhm.
themselves a tenant, you like I've heard stories where, you can get in trouble. So we make this, we love our customers and we want them to have an awesome camping experience, but
Well, yeah, I mean, if they're coming back for 20 plus years, there's clearly something there that they like.
yeah.
And you guys are obviously taking great care of them. So, what does an average deal look like for you? So, uh, in these different parks, are you buying a couple of acres at a time? Are you buying, actually, let's talk about this
Yeah.
specific deal. So, just recently, on getting back to Twitter, and talking about the engagement and community on Twitter. You had been working on a deal for the past year or so, and
Yep.
you talked about this deal that it had been a year in the works. I believe you were struggling to raise some capital for this deal, and then you reached out to somebody on Twitter, and essentially you guys partnered up and went and got this deal done and have raised the capital. Everything. Tell us a little bit about that deal.
Yeah, so that's pretty awesome example of the power of the retweet community.
Yes.
And it's a guy I followed for a while. His name's Joel, and he's funny enough historically focused on the mobile home park business. And as cap rates have compressed pretty wildly in that space, he's been looking for kind of his next niche. And we connected some months back and just kind of became acquaintances. I knew him reputationally from a brokerage firm that I worked with in the space. He's a really professional owner, can raise capital with the best of them. So I've been very fortunate to leverage that in our partnership. And we got together, put together a package for the deal, had some due diligence things to work through. That's 150 RV sites in the Catskill Mountains, and that one is 100% occupied by these full season renters.
Where is the Catskill Mountains? I apologize.
So we're like 2 hours northwest of Manhattan,
Okay.
which is pretty amazing for a campground type property, because compared to other locations, it just seems like you have an unlimited potential camper base, because most of our campers come up from the city, and millions
Yeah.
upon millions of people in that metro area. So
And you said that's those 150, they are there year round?
most of them, they're campers, they're year round, but we're not permitted to operate in the winter. So like every year we have to go to the New York State Department of Health to get our operating permit.
Got it.
And that's a 6-month operation. The
Oh,
permit
wow.
allows for 6 months of operation. So it's funny, I talk to investors all across the country, and there's very, very wide spectrum of niches within the RV park niche, seasonal campgrounds being one of them. So, I talk to people from like Arizona or Southern California, and or even like Texas, and to them an RV park is like sort of a type of mobile home park. Usually it's transient housing. It doesn't really have like a camping flavor at all. And it's not really a hospitality property. And so we're on the hospitality end of it. It's very rustic. We're not at this point, I wouldn't say we're in the resort world, although the place we just acquired has the bones for it. It has a swimming pool and a rec room and an arcade, and
Wow.
but it's kind of wild what you see with these high-end properties and the amenities that they're developing. Even probably 5 years ago, a swimming pool and like a store and a rec room and an arcade was enough to maybe call yourself a camping resort, but now it's
Even more.
Water parks and
yeah, it's
go-kart
crazy.
tracks and
Exactly.
crazy. So to give a little background on me, just this past year, we just moved back to Kansas City, but my wife
Nice.
was travel nursing, and we, for the first half of it, unfortunately, we had to give up the camper because the truck was a disaster. But we've been traveling the U.S. in a camper, so I've been staying in a lot of resorts and some that call themselves resorts that
Yeah.
aren't resorts. One, for example, was in San Diego, and I'm not kidding. This thing, it's a parking lot with lines,
Sure.
and they stack them in there.
Yeah.
And they're actually partnered with another park that you could walk to that had a pool and stuff. But great location right on the bay in San Diego. I walk my kids and the dog around the bay every day. Beautiful. But I wouldn't
Awesome.
call it a resort. But one thing they did was they allocated a certain amount of spots for long-term tenants and then others for short-term. And
Sure.
the ones in Austin were like that too.
Yes.
Yours are all booked up for the full 6 months. Do you not like the changing, like the weekenders? You just want everybody in there?
It's not that I don't like them, but it is, that transient business adds an operational burden that is pretty significant. So I don't think we've discovered it yet, but I think there is some mix that is ideal. Especially, we're pretty focused in the Northeast for now, which just lends itself to full season renters. But you'll see parks that, have a 50-50 mix all the way up to
Yeah.
100% seasonal. Like at this one that we just purchased, that's 100% seasonal. We'd like to see some transient business. So we're looking at potentially developing some surplus land there that lends itself more to the big pull through sites for the big rigs. Because that's the other thing you see in the Northeast is heavily wooded properties that it's a real pain in the neck to get the RV into the site.
Oh God. Yeah.
So, but people are willing to do that if they're going to plan on leaving the RV there for a year or multiple
Yeah.
years. So
But
there,
for
you'll see like a section that's carved out that's really easy in and out, and that's the transient, and then the rest is seasonal.
yeah, which I can see the positive and negatives. The 6 month customer, they pay for their season and you're done. Whereas, like you're saying, there's more logistics that going into it trying to get weekenders.
Yeah.
But you charge more on a nightly basis. So is it worth the
Right.
struggle?
Yeah.
But yeah, I could definitely. So in San Diego, we had to move campsites because they have laws there where you can't stay in one site for so long because of real estate's so expensive out there that they don't want all the parks just full with long-term stays.
Yeah.
But this one campground gave me the site, and so I had a crew cab long bed Ram dually pulling a 42-foot fifth wheel, and I get to
And he's
this.
5'4", so it makes it really funny watching him get out of that truck.
Yeah, they call me Big Rig Ryan.
Big head Ryan.
Yeah. But yeah, no, I get the struggle, in the woods and stuff, very pretty. But getting up there and getting to your spot and you have a rig behind you that you're not super comfortable pulling because you're a weekender. It's
right.
And you get to that spot and you see it, you're just like, there ain't no way I'm getting in this. You got to really open them up for those big campers.
And I think that's kind of what Matt's saying too, Ryan. It's like there's it's not just logistics, but I would think insurance, everything, your cost, all that stuff goes up. So yeah, you might be able to charge a little bit more, but the reality is the risk reward, what is that? Because if people are pulling in trailers in and out every weekend, how many accidents does that cause? How much stuff are they breaking versus those things just staying there for 6 months at a time? It seems like something that once you guys figure it out, Matt, and tell me if I'm wrong, but once you kind of stabilize these assets, then you can play that card. But I think just stabilizing it first would be my goal. And then from there, going and trying to figure out, okay, which ones would we be open to doing the weekend rentals on? Probably the ones at the front of the park that are easy to get to, aren't going to affect the long-term ones, or potentially, damage them as they're pulling in and out. Because I've seen a lot of nightmare stories of people that don't know what they're doing pulling in and out of these parks, and man, it's not good.
Yeah, it's funny seeing the wide range of skill, I'll call it, in towing. Like we have a couple guys that camp that are like former tractor trailer drivers, so they'll
just whip them in.
They'll see somebody struggling to pull in, and they'll just be like, "Get out of the truck, let me do it."
Yep. So, that's exactly what I would do if I was, next to somebody that was pulling in poorly, and I was afraid one of my truck or my RV is going to get hit. I'd be getting them out of their own vehicles.
Yeah. For sure,
that happened to me. The first spot we went to, that place in San Diego, this guy had an RV and he pulled a Porsche behind it. And he saw me start backing in and he's like, "Hey, I'm going to move my car." I'm like, "I suggest you do." But hey, I wanted to get into, how are you breaking these down? Are you looking at them like you would an apartment building? Okay, each site's going to bring me this much. I want to cash flow this much. Or how do you break it? Or is it just...
Hey, before we even get that far, to be honest, let's talk a little bit more. So we started talking about this deal that you're doing with this and with Joel off Twitter. So let's get back into that deal. Let's talk specifics on that. So what does that look like? How much land is it? You said 150 slots or whatever you call them now. Give us more details here.
Sure. Yep. So it's 72 acres and change. Okay. It is located on a beautiful, really world-renowned fly fishing creek.
Okay.
in the Catskill Mountains. And so we get a ton of anglers to camp
Wow.
there, and they'll come out with thousands of dollars of fly fishing gear, and it's pretty amazing to see. But um, and it's funny. I've toured so many of these properties, and it's almost like three layers of like we're the niche within the niche within the niche. And when I say that, it's really wild country where our parks are located. Honestly, some people are like too timid for it. I've had a couple of times where like a couple shows up and it's the guy that has been there a few times and he's got his new girlfriend and they go to like pitch the tent and the girlfriend's like, I'm pretty sure we're gonna get eaten by a bear
Little
when we're out
nervous.
here. So like it's funny to see and the boyfriend will come in and say, I'm so sorry, your place is wonderful. I'll be back. I just won't bring the girlfriend next time.
Hey, or vice versa. I know some of my friends, their significant other, she is a lot tougher than them, and they couldn't handle it. Like Ryan, his wife,
Sure.
she'd be
get outta
fine, but
here.
he probably is not sleeping in a tent.
He's
Right.
full of it.
Yeah. So yeah, I mean it's black bear territory. It's very wild country. Where I've almost become jaded about like what the definition of camping actually is, because I've toured, parks like outside of Boston or something like that, and like they have their tent camping area, and you look in any direction from where you pitch your tent, and you see 100 RVs and a house and the highway, and like at our places, you pitch a tent in a spot that you would swear you're the only person out there for miles and miles because
Wow.
it's so heavily wooded. It's like really it's truly camping for like the outdoorsman and the outdoors woman. So it's funny. I look at these deals and like, we're working on a new one that's closer to a major metro. It's still wooded, but it's not, it's just not the wild country that I've become accustomed to working on these other properties for the last few years. So at the first one we acquired, uh, we're more known for the tent camping. That one's 50 RV sites and 23 tent sites. And we actually make a lot of revenue on the tent sites, which
Is
is
that
kind
because they turn over so much, or you could just get more per
Square
piece of,
foot.
or per square foot?
so both. We
Okay.
really rent them by the night. Like we don't really do any weekly pricing or monthly pricing or anything like that. It's a nightly price, and we have add-ons of like, extra adults that are unrelated, extra cars, pets, larger groups, whatever. Holiday weekends are extra money. So any given weekend with a couple of those add-ons, could be paying $120 a night for a primitive tent site where they come pitch their own tent,
Wow.
and they're happy to do it. So at our smaller place, we made almost $60,000 last year, just on primitive tent sites that have no power, no
Wow.
water,
They're
no
just
nothing.
piece of ground.
Exactly. I mean, they're beautiful. They're next to the creek. And
I've
they're
seen some of the
special.
photos and looked at some of your stuff. You guys have
Yeah.
some very beautiful properties.
Yeah. So, it's different. I mean, we don't have much in the way of amenities at all, but our customers aren't really looking for that. Somebody will call up and say, "Hey, do you have a swimming pool?" And it's like right off the bat, that they're probably not the right
The wrong
customer.
person.
I mean, at the new place, we do have a swimming pool, but it's not a camping resort. It's not, it's truly, even in your RV, it's truly camping. Your RV is going to be covered in bugs and moths and
It's a
uh,
lifestyle, man.
yeah, yeah,
It sounds like it really is. And for the true anglers or the true,
Outdoorsman.
outdoorsmen, outdoors women that want to get away to silence and to the wildlife for a
yeah.
weekend or 6 months at a time.
Yeah.
Matt, would you be comfortable sharing maybe some numbers?
Yeah.
What it cost you to the one that you said 72 acres in New York? I imagine that can't be cheap. And then it's 150 sites.
Yep. So that one was a $2 million acquisition. Um, that has $500,000 gross revenue in place.
Whoa, 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 whoa. Hang on a second. That's good numbers.
For real estate, yes. Yeah, it is. And that's what I always caution people is like I call campground investing, especially like forget the transient affordable housing in the Sun Belt. Let's talk about seasonal campgrounds. That's a hospitality business. So you've got to worry about your website, you've got to hire and fire people, you've got to
Yeah.
do marketing, you need, workers' comp insurance and all the
I
like
guess that adds up. That
it
okay.
is well, and it's a brain damage factor that takes you away from like way away from what it's like to own an apartment building versus a campground. You do have the predictability of the revenue, which I think is very similar. And honestly, you had asked about the underwriting earlier, and I didn't really answer that question, but it's not too far off in terms of the underwriting. I believe that, you can operate these things at a 50% operating expense ratio.
That's still really good.
Yeah, so, on 500K gross revenue, you're talking about, 250K NOI. So, that
Still
one was,
talking a 12, 15 cap,
yeah,
plus.
and
That's really good.
that's rare to find. This market has changed rapidly over the last, 3, 4, 5 years. Private equity has certainly taken notice,
Oh
and
yeah, on everything, right?
yeah, so they've been driving the prices up, driving the cap rates down. Um, so it's good to see on one end. It's kind of frustrating on the other end because honestly, 5 years ago, you could call up campgrounds and offer them a 10 cap deal, and they'd be like so super pumped to take it. And now it's like I cold call a lot, and I talk to a lot of owners, and a lot of them have 5% cap rate pricing in mind, and it's like, especially with the way the debt markets went, it's like
Yeah,
I love campgrounds. It's a business I'm passionate about, but for a 5% cap rate, I could probably go
doesn't
buy
make
a
sense.
triple net, retail deal that I don't even have to think about. It just doesn't add up.
Yeah, and I think you just put a good point with all what you just said. So, forget the affordable housing, the about everything you were just saying, because, and the reason I think you're saying that, Matt, and tell me if I'm wrong, but you're actually dealing with a lot. You're really running a hospitality business plus kind of a real estate business at the same time. So
Yep.
you've got a lot more day to day activities you've got to oversee versus just like us, we a lot of single family homes, a couple small multifamily, but it's kind of get the unit turned over, get the tenant in there, and then it kind of just operates itself, right? Now, every now and again, we have some calls, but you're on a day to day having to manage people, having to manage people coming and going, having to manage amenities, all of that. So you really do deserve to make quite a bit more, I guess, at the end of the
Right.
day.
Right. Honestly, sometimes it's like,
It's two or three businesses within one business.
yeah, exactly. Like if I mean, we're like we look at deals and we try to make them pencil at maybe like an 8% cap rate with some upside to get it to maybe a double digit stabilized. But even
Man, that
sometimes,
seems low now that I start thinking about it, though. I mean,
right?
that's still great, but that
Honestly,
seems low.
yeah. Honestly, sometimes it does feel low from the inside too because, um, it's so there's some tough days, your manager quits
Yeah.
on you, or the water system fails, or the Department of Health is uh knocking at your door for something. And there's good days and bad days like any business. I think what helps us maybe look past, not being able to get like the 12 to 15% deals, um, is the fundamentals of the industry. I mean, especially on the seasonal side, like every professional run park has a huge waiting list.
Yeah.
There's tons of room in the rates. I mean, it's like, I firmly believe that no one actually knows the answer to the question, what is the market rate for a seasonal campsite? Because you have your two REITs in the space. There's Sun Resorts, Sun Outdoors. They have a couple different names, but that's under Sun Communities, which is a big mobile home park owner, and then also Equity Lifestyle Properties, which very similar portfolios. They'll have seasonal sites in the like $6,000 to $8,000 range, which is the very high end. Our parks are like in the $3,000 range.
Oh, wow.
But that's super affordable to have a vacation home,
Absolutely it is.
$500 a month for the 6 month season. So I feel like there's a ton of room in these rates. I don't think anyone's really discovered like what that is. You get these private equity groups coming in and they'll just buy a park and they'll take $3,000 rates and not improve anything and jack them up to 4 or 5,000,
Yeah.
and they get away with it. I mean, it's I have the constant battle of like, when I buy a new place, I want to go in and make some improvements so that I can justify the next round of the rate increases, which, you know, you can't always make all the customers happy, but I try to,
Yeah.
that's when I'm kind of like trying to work out the playbook of like new acquisition. All right, upgrade all the signage, repair the roads, repair the swimming pool, just have like a program to implement from the start
Like a
so that I
standard
can,
operating procedure, essentially.
yeah, so that I can like feel good and
Justify.
have some justification behind the rent increase when inevitably some of the customers come back and say, "Oh, that's ridiculous." Like,
You're
uh,
going to get that no matter what. And,
yeah,
sometimes that's actually good because it's one of those things where it's like, look, we want some of these people to probably phase out. We want to get them out because we know we can make more, but we're going to make them feel good because we are going to put a little bit of money into this thing. So when the ones that want to stay, but, might not love the price increase, they drive up to the site and they realize this all of a sudden, immediately when they get there this next season, that holy cow, these guys are taking better care of it. This place is going to be around for a long time to come. All the memories we're going to be able to make. Okay, I could pay an extra $500,000 a year if they're going to reinvest X amount every year as well. Great.
right. Yeah, it's funny. The I'm still, I'll say, a little bit too involved in the first place that I purchased because I ran it myself for the first half season that I owned it, before I had the manager in place. So, I like I said earlier, I love my customers, but I'm trying to kind of build the business to be scalable, which means the owner shouldn't be in touch with all the customers. So yeah, I've got a great staff in place, but some of the
It's
customers,
hard sometimes,
yeah,
man.
they still have my cell phone number. So inevitably, when the rate increase goes out, they know they're supposed to call the manager, but they call me.
Yeah.
So it's funny. I have a guy that's been in the site for 15 years, and the guy next to him is brand new to us last year. And so I think I had him at like $3,500 for the season. Really awesome creekfront site, and his neighbor, equally awesome site. So I think I raised the longtime guy up to 3,000, and he just gave it to me. He's like, this
Oh,
place
sure.
this place is not a resort, it's a rustic campground. Nobody's gonna pay that. And I'm like, literally had this conversation a year ago with your neighbor who's brand new, who was happy to pay 3,500. And
Yeah.
he even said to me, he's like, "Hey, this is more than I wanted to pay, but I think you know this. I'm gonna be honest with you. This is a one of a kind campsite. I'm never gonna find this anywhere else.
That's awesome.
So I'm happy to pay it." Which, it's funny, when I acquired that one, I knew it wasn't at all what I set out to find, which was more like the second park I acquired, 150 sites, mostly seasonal. I way underestimated how much of a project the first project was, but I just had this instinct about it that like they're both special properties, but this first one just has this really unique flavor to it. Very secluded, very quiet, just you know, truly one of a kind. And I
So
was
did you get into these because you were going camping a lot yourself, or how did you get into this? I guess we kind
not
of missed that
really.
at the
I've
very
never really
beginning.
been a big. I own an RV now that I own a couple RV
I would
parks.
hope
But,
so.
honestly, before that, not really. I've always loved hiking. I've always like loved the outdoors, just not necessarily sleeping outdoors.
Sleeping in a tent
So
is the worst thing in the world. I've done it
yeah,
many times, and I told myself about 10 years ago, I am never sleeping on a rock at night again.
yeah, right, exactly. And that's, I walked through this place a few times before I bought it, and what just kept coming back to me was like, this is a really cool place. Like, I'm not even like an outdoorsman, and like I get something out of like being on this property. The
I love
creek,
it.
the animals, a bald eagle like swoops right by by your campsite while you're sitting there. I literally saw one, the first time I was there, bald eagle swoops down and grabs a trout right out of the creek, literally 15 feet from me, and I'm like, okay, this is cool.
That's awesome.
Um, so,
So
it's
you just
been
fell in
fun.
love with it and decided this is what I want to do, not this multifamily thing where they're calling me Saturday screaming because their plumbing went out.
Yeah, I mean,
Which you
yeah.
might still get that, I guess.
Well, you do, but honestly, the one of the huge differences that I've discovered is like people are generally happy to be at the campground. And it's,
Yes.
not that we neglect repairs or anything, but like it's not such a dire emergency if the water system goes down for a day. If some needed repairs are required, you can do it on a Wednesday when the park is probably going to be empty anyway, because even the long-term renters, that's the seasonals, that's their weekend getaway. They're not going to be
Yeah.
there for the whole 6 months. So there's just like a lot less pressure involved with it. People are generally happy to have interactions with management and with the owner.
That's
So
awesome.
yeah, it's very different. It's a lot of work, but it's
So on this 72 acre deal you guys just acquired, you paid 2 million for it, bringing in about
yep.
500,000 a year. How do you scale that? What does that look like? Do you try to buy land around it to expand your campsite? How do you guys continue to monetize on that and grow your revenue besides just increasing lot rents? Or I guess it's not rent, lot fees.
Yeah. So expansion is a piece of it. We'll always look into the feasibility of expansion at every property we buy. Um, it's not the most straightforward thing to develop campsites. A lot of times you're going to need zoning relief to do so. So it's an endeavor, but it could be a highly profitable endeavor. So we at least pursue like entitlements to get the property approved for so many more sites. And then at that point, we evaluate, does it make dollars and cents to.
And you're doing that prior to acquiring the
Um,
property.
no, because
Okay.
I mean, we'll kind of conceptualize it. And so we wouldn't buy a property having to bank on the expansion
Got
to
it.
make the numbers work. So we buy it for what it is in place, and then anything that we can expand is gravy. Uh,
Okay.
I mean, there are plenty of people that are figuring out the ground up development aspect of this industry, but it is not straightforward. Like even to add one campsite to our parks, we would have to get a zoning variance because, and you'll see this with a lot of campgrounds there, the zoning is grandfathered in and the approved use within the zoning is a grandfathered use. So it
Yeah.
can
I
get pretty
could,
complex.
especially with you guys, I could imagine the difficulty to develop is probably, I mean, you even said it, but I bet you it is a lot more difficult than what people realize. Because thinking about it just in my head, and tell me if I'm wrong, but if you're buying these sites that are kind of out in the middle of nowhere in the wilderness, getting plumbing, getting any kind of electrical run, it's going to cost a lot of money because typically you're going to have to run that pretty far to tie it into anything else, I would assume.
Yeah, we have at each park, it's miles and miles of electrical line, of water
Yeah.
lines.
So that is millions of dollars to run
Yeah,
those to those sites.
yeah,
And that's what people don't realize is that stuff is not cheap at all.
right. Yes, exactly. So septic is tough, and that's usually the hair on these properties, especially in the Northeast. A lot of these properties were built in the 60s and 70s
Mm-hmm.
before zoning or building codes were even
And
written.
now you've got to bring them up.
Yeah, yeah. It's basically as soon as you make a change, people start fishing around and asking questions. So there's a lot of creativity you can bring to it, and it's kind of a double-edged sword in this business because you have endless options in as to how you can add value to the business, but yeah, you can also get lost and go in too many different directions at once. So like one really cool aspect that's kind of built in is with the RV sites, you can turn those into more, I wouldn't say traditional, but a little bit more mainstream short-term rentals. Like we've
Mm-hmm.
done tiny homes on wheels that you put on Airbnb, and you can rent those for hundreds of dollars a night versus
Very cool.
the $65 a night that you get for the RV site. You can do glamping tents, so that people can just come up with their sleeping bag or whatever, and they don't have to pitch the tent. You can charge a premium for that. You can
So you guys are
increase,
really getting creative in ways of
yeah,
creating revenue and
yeah.
generating
But
different
you
revenue
nailed it earlier
streams.
when you said it's like maximize and stabilize what you have in place. And then once that's running like a well-oiled machine, then you start pulling levers and getting creative.
Yeah.
So
Setting new goals each season, I would assume is like, okay, this season we're gonna go from 5% Airbnb or short-term type stuff to where we can
Yep.
maybe, okay, that makes sense.
that's
Yep.
what in Austin I stayed at two different campgrounds. One was the Sun Outdoors, which you mentioned, and the
Nice.
other one was a different business, but the both of them were putting in they had places that used to be sites and they're converting them, they're putting tiny homes. I mean, just
Yep.
stacking them in there. And some were Airbnb, some were more of a long-term monthly type deal, but they're super cute inside, had little lofts and stuff like that for families loved them.
Yeah.
And they charged, I mean, more than a hotel for them.
Ryan, what were you paying like in San Diego on a monthly rent space, just so we can Mac
Oh,
and know here? What is he
San,
competitive?
San Diego was, I mean, literally a parking space, all concrete, and it was what was it, 2,800, $3,000 a month, something like that.
What,
Really?
Matt, you're undercharging, my guy.
Yes. That's
I
what
mean,
partner Joel says. He's like,
Oh
it's
my
prime
goodness.
location though. It's like prime
yeah.
location.
2,800, Ryan, you can rent a, oh my gosh. No
We
way.
we were saving compared if we would have done like a furnished finder, like a Airbnb or something, we were saving like $1,000 a month or something. So,
That's it. No way you can get me to do that with 3 kids under the age of 4 and a
It's a
wife.
nice
You're
camper.
out of your
It's a
mind,
nice-
Ryan.
So hey, Matt, we are running long on time. I've
Sure,
lived
no
in
problem.
these places, so I wanted to hit on this before we wrap up
Sure.
with a few questions. You got to have some crazy stories. Give us one good one. Was either a customer or something, because these camping folks can be wild ones. You got anything off the top of your head?
Yeah, I mean, it's honestly, it's been not as prevalent as as you would think. Um, More crazy stories about prior owners. The one person I purchased from used to walk around with a gun on his hip, like he was the
Not
sheriff,
surprised.
and get into arguments with the customers, and
Oh my God.
so it seems like there were some close calls there.
That is
Honestly,
terrible
yeah,
business.
with the predominant seasonal business, people tend to care about the property more, so that's one aspect that's appealing. But the transients, like,
Parties.
one, yeah, parties, tenters are known to party. At my first place, pretty early on, a gentleman showed up with an RV and apparently thought he was supposed to be showing up to a resort, and he threw a total fit. He actually spiked the office phone on the floor, broke the phone, accosted my manager.
That was sweet of him.
Pretty wild. Yeah, it's honestly, I think I've been fortunate though, in the almost 3 years I've been in the business. I've avoided any disasters, although it seems like I was close to one seasonal that left us had a one of those Rubbermaid sheds, not even locked, and apparently had like 50 rifles just in this Rubbermaid shed, not even locked.
Holy moly.
Yeah, so
But he just left it all there for good or just for the season?
he left, so he's gone. He like tried to sell some of the guns to some people, and
Some
he
campers.
eventually got them all out of there. But yeah,
Jesus.
especially like secluded, with the old owners that they're not trying to maximize revenue, they're just trying to like
Yeah.
have their lifestyle business. It can get a little scary with some of the trailers that we've had to dispose of, that
I bet.
you might worry about somebody like cooking up some drugs in a trailer because nobody's around. They can spend the whole summer there without
It's kind of a hideout spot.
Yeah, yeah, exactly.
So, and that was the question I had real quick, Ryan. Let me ask this. Are the majority of the owners you're talking to, I'm just thinking they're probably own these properties for a pretty long time.
Yeah, yeah.
Okay.
It seems that there's, at least in the Northeast, and for what I've heard around the country, there was like a wave really like in the 60s and 70s of these things being built. So you're
Okay.
either talking to like the first generation super long-term owners, or second generation owners that could even be approaching 30 years themselves. So
That
it's
makes sense. I would
been
think, yeah.
fascinating.
Okay. Ryan, what's the next one you got there?
Oh yeah, and to go back, so I texted my wife because I couldn't remember what we're paying in San Diego. So the houses I think were around 2,500 to 3 grand. She said we're paying around 15 or 1,800.
Oh, okay. That sounds a little better, but still, that's crazy.
No, it's crazy. Yeah, yeah, it's crazy. It was literally just a concrete slab was the RV park.
Wow.
But so yeah, Matt, if you don't mind sharing a personal story of a financial decision you made that had a significant impact on your life, and then what did you learn from it? This could be a good decision or bad decision.
I'd say, when I exited about 35 apartments, 7 or 8 buildings, to double down on the campground business. It was, I would say it was actually a pretty easy decision. Maybe you should have been a little harder in retrospect, but I think it was a good decision. I think it probably shaped at least the next decade of my life, as I fix these properties up and get them stabilized. And I do tend to look at these properties like they're potential forever holds, not just your classic 5, 7, 10 year holds.
Yeah.
So I think, with doubling down on the industry, I probably have a couple properties here at least that I may own until the day I die. So
I
I'm
love
hoping,
that.
yeah.
I'm gonna throw Ryan off script because I want to ask you a couple last things real quick. Number one, and to your point right there, how many different properties do you own, and how many slots or spaces do you have for RVs in total?
Yep. So it's just 2 parks right now.
Okay,
Working on a couple more deals.
so about 200 total slots between the two parks.
Yep, 200 RV sites and about 50 tent sites.
Okay, awesome. And then what's it look like financing wise on these deals?
So the debt markets for these properties is maturing, seemingly on a daily basis. Uh, it is a lot more difficult to finance these when compared to your traditional commercial real
That's what I
estate.
would think.
But there are some niche lenders that love the space that have wrapped their heads around it. Um, Seller financing is still super prevalent. So the first deal I did was on seller financing, and then the second deal was actually all cash close. So we were originally going to seller finance that, but then we negotiated a big price reduction uh, during due diligence, and the trade-off was that we gave up the seller financing.
All
Um,
cash.
but we felt good enough about the deal to do it all cash.
So if I was going to finance it, is it 30, 40, 50% down typically on a 20-year,
Um,
10-year?
yeah, I'd say you're probably looking at 35, 40% down.
That's what I would think.
Most term sheets you get. I mean, what's interesting is like your first best option for any deal is like just Google Maps search the local banks around the
Yeah,
park.
always.
And what
Guys,
what I
take that
found,
tip on any investment. If you're in
yeah,
any niche,
yep.
find local banks. They know those areas.
And honestly, what I've found is that they have better product.
Yep. And
Not
they're
on
willing to take
average,
risks.
but for the campgrounds, like they'll have a pretty mediocre, like general commercial real estate mortgage product that's like 75% LTV, like whatever, 6 or 7, or maybe even like 8% rate these days. But sometimes 75% LTV makes the deal pencil a lot better than 65% LTV. So
Yes.
credit unions, local banks, always try those first. But
Yeah.
yeah.
No, I totally agree. And that's on any kind of investing you're doing. Talk to local people. They know those areas a lot better than the big national banks that have certain boxes that they have to check, and that's all they want, right? And
Exactly.
then last thing, if somebody was wanting to invest, how does that look like for your, or what does it look like for your investors that are coming into these deals? Are they LPs, and are they getting a guaranteed return? Are they, what does that look like if somebody wanted to invest in one of these projects with you?
Yeah, yep. So we've done each deal with LPs so far. Um, Typically doing an 8% preferred return,
Okay.
prior return, then return of capital after that, and then some sort of cash flow split, after the return of capital. So usually targeting double digit annual returns, hopefully like mid teens, uh,
That's
is what
really
we
good.
can offer the investors. And honestly, we find a lot of the investors are highly interested in the depreciation aspect of it,
Yes.
because there is a shorter, it's pretty complicated, but the land improvements, which is your hookups, kind of the meat of the RV park, is typically on a 15-year depreciation schedule.
Yep.
So you get a quicker depreciation, which obviously is a double-edged sword in and of itself. But when you have a lot of these high net worth, high income investors, you can sometimes engineer a deal where they get like a 100% loss year one.
And that's through like cost segregation
Yeah, which
studies.
then changing there now it's down to 80%.
Yeah, but
But
there's legislation that they're trying to actually
right,
push it even more. So yeah, so like concrete, a lot of the exterior stuff, 10 to 15 years, you can bonus depreciate, up to 100%. That's, that's pretty good.
yeah, exactly.
And it's changing, like you said, 80% this year, I think, for properties. But if you bought the properties in the past, you can still go. But actually, we're going to have Yona on a podcast here pretty soon.
Nice,
He's a cost segregation
nice.
expert. So we will be getting into that
Yeah,
pretty deep here.
nice. Look
But
forward
yeah,
to that.
Matt, tell us how people can find you, where they can reach you, if they're interested in a deal, where would they go to look?
Yeah, yeah, I'm super active on Twitter, so I'd say
Yes,
that's
you are.
probably the best route and easy to remember. My handle is at I buy RV parks. So, love to
Great handle.
interact and connect with people, and that's usually the way I do it these days. Kind of.
He's so active, guys. I know that he cooked on the Blackstone last night.
Nice.
I love my Blackstone. They are great.
Yeah, I love it. A lot of fun. Great for camping.
And then what about your website?
So the name of my business is Parksville Properties LLC. So the website is parksvilleprop, PROP.com. Parksville is PARKSVILLE.
And we'll have links to both of these in our show as well, guys. So don't worry too much there. Ryan, anything else?
No, Matt, is there any last second things before we hop off here?
Hey, always happy to talk shop. So feel free to reach out on Twitter, or my email's on the website. So anybody who's interested in the business, love to talk shop. Feel free to reach out.
Perfect. Love it, man. We greatly appreciate you coming on, and I will be in touch. I've got some interest in talking about potential investment opportunities there. I might need to sell on my single family and just roll it into your RV parks here, man.
Love to hear it. Love to hear it.
There we go. Yeah, and like Scott mentioned, I'll put everything in the description below if you want to get hold of Matt. Thanks for listening. Be sure to follow us on all social media and where you listen to podcasts. And thanks again, Matt. And we'll catch you guys on the next one.
Yep. Thanks, guys.